Hey friends, this is Dan Keller, your mortgage advisor at CrossCountry Mortgage. I hope this message finds you well. I'm making this message because I'm having anywhere between 20 and 50 conversations with clients every single day, and I find myself repeating myself often. In fact, my wife came up the stairs yesterday and she said, "Oh my God, I feel like I've heard you say the same thing like 20 times today already." And she's right. This is something that I believe every single client needs to know. And these are questions and concerns that every single client, whether they're refinancing a home right now or they're purchasing a home, these are questions and concerns that everyone has right now. So what I wanted to do in the next 3 to 5 minutes is I want to give you kind of an update on the mortgage market, but I want to give you updates and solutions that I have at my disposal that are coming as I am going to make you an update here in a minute that I got this morning. I'm going to share something about appraisals that I received yesterday. So this is relevant information that you can use or that you can share with someone. So if you find this information valuable, do me a favor, share it with someone that you know. The first thing I want to talk about are mortgage rates. We are back down to prehistoric lows. So it is Tuesday, March 24th, 2020. This morning, I was able to lock in a 3.125 30-year fixed rate mortgage on a purchase for a client. Now, this is not a rate quote. It's a scenario that I experienced this morning. If you'd like a rate quote based on your credit score and your down payment and the type of property purchased, I want you to reach out to me. But 30-year fixed rates are anywhere between 3.125 and 3.375 right now. As far as 15-year fixed rates, we're looking the same range, about 2.625 to 2.75. And we help a lot of VA clients, veterans, and active duty servicemen and women in our office. And you're looking in the low threes as well right now. So I want to discuss that because it's really important to understand where rates have been and what's causing them to be low. The government over the weekend put over $100 billion into the economy through quantitative easing, which went into purchasing mortgage-backed securities, which brought liquidity to the lenders, which brought to the banks, which allowed mortgage rates to drop back down to historic lows. A week ago, they were at 5%. Now they're back down. So that's great news for you, whether you're refinancing or purchasing. The other thing I want to talk about is the appraisal process. This is really great news. Now, the appraisal process, this is news that I just got yesterday from the government and the FHFA to protect the safety of homeowners and appraisers and to keep the real estate and mortgage industry moving forward. They're going to allow drive-by appraisals versus in-home inspection for the appraisal. So that's great news there. As far as I know right now, government recording offices and title and escrow companies are considered essential. So they are excluded from being shut down during this 14-day shutdown that we're experiencing due to the coronavirus. So that's great news. The last thing I want to talk about is recessions and why I believe that, and many economists believe the same, that the coronavirus and the recession that we're in will not tank home values, will not tank the housing industry. And here's why. If you look at the 2008 crash, you saw you saw a couple of things that stood out that are different than now. One, relative to inventory. We had about 20 to 24 months of inventory back in 2008. Today in the Puget Sound, we have less than a month's worth of inventory. You combine that with number two, 30-year fixed rates being at historic lows. Back in 2008, 30-year fixed rates were in the mid sixes, all right? So those two things combined right now are going to keep the housing market moving forward. If you ran numbers based on buying now at 3.25 or waiting and having interest rates go back up to 4.5 or 5%, but home values drop by 10%, it still makes more sense to buy right now. And that's crazy important to understand. And I think more consumers today are getting that. And so they're in the market. I can tell you that we are busier than ever with home buyers. And this is, again, March 24th, 2020. Number three, there are no subprime mortgages in the marketplace right now. And there's lower foreclosure rates now than we saw in 2008. So that's important to understand. Number four, households are saving 8% of their gross income. Right now, back in 2008, households were only saving 2%. Number five, homeowners have equity today. Homeowners in 2008 had very little equity. Number six, Government is offering foreclosure relief, which is really important. If you are laid off or find yourself out of work due to the coronavirus, you can get up to a year's worth of subsidy or forbearance on your mortgage, which is important. Number 7, the government is acting fast, like infusing $100 billion over the weekend fast versus in '08, they were a little less quick to respond. And then lastly, number 8, people are moving to Washington State. We have jobs here. So this is why I believe that the coronavirus will not crash housing in Seattle. If you have any questions, let me know. I'm going to bring these updates twice a week for you. If you need anything, let me know. Lastly, if you found this valuable, do me a favor. Share it with someone that you know, and I'll see you back here on Friday. Bye for now.